Live to Tom Piotrowski over at CommSec. How the market's going to be in the lead up to this decision by the RBA this afternoon, Tom?
Pete, it's almost universally accepted that we'll see a 0.25% rate hike from the RBA today. So that's not so much the issue. We're going to kick off with a slight deficit. The markets are pointing to a loss of around 0.25% for the ASX 200 this morning, and that is mainly a reflection of the fact that we had a pretty good day yesterday. The ASX 200 up by almost 2/3%. But as I point out, it's the expectation that we'll see the rate hike today. It's really about the language that will be accompanying that decision. Last month, we saw that the RBA had changed that language, suggesting that more interest rate rises would be required to get inflation under control. It's how that statement changes today, Pete, that will interfere with expectations for the next couple of months, because we have seen some weaker economic news over the course of the last couple of weeks, and there is certainly case for a pause. So there'll be a lot of attention paid to the language. US markets have generally been on a positive footing, although the S&P 500 is off its best levels of the session. Worth pointing out that over the course of the last couple of days, from its worst to its best levels, it has rallied by the better part of 4%. So a little bit of a breather ahead of another important interest rate oriented issue, which will be the Jerome Powell testifying to Congress over the next couple of days about what's going on in the economy. And of course, that creates a forum for a lot of interrogation about where interest rates are going.
Okay, Tom, appreciate that. Thank you.